Hey everyone, this week I'm going to focus on the retail real estate results for the first quarter of 2025 and offer some insights into the sector outlook. As we entered the year, retail real estate was on very solid footing. The vacancy rate ended 2024 at 4.4%. Construction was limited at just 0.4% of inventory. Absorption was positive for 17 straight quarters, and rents were growing at a modest 2%. But in the first quarter of the year, there was a small but notable shift of momentum. The vacancy rate for all retail, including single and multi-tenant properties, ticked up 10 basis points from the fourth quarter to 4.5%, which is still very low by historical standards. But space absorption drifted into negative territory, declining by 4.7 million square feet. Now, that number in and of itself isn't particularly significant given that we track almost 9 billion square feet of retail space, but I didn't anticipate negative absorption for the quarter. And given the potential implications of the trade war, retail space demand could soften. Now, I need to point out that numerous companies have promoted their expansion plans for 2025. Advance Auto Parts, the Japanese retailer Daiso, Five Below, Academy Sports, Costco, Home Depot, Target, and many others plan to expand this year. But the operational climate could become increasingly complex this year as the impact of tariffs begin to manifest. Tariffs will affect different retailers in different ways. Each retailer has their own supply chains and they source products from different places. For example, an estimated 60 to 80% of Five Below's goods come from China, which faces the highest tariff barriers. For Best Buy, the estimate is 55 to 60%. Meanwhile, only about 30% of Target's products are sourced from China. So the competitive landscape will be tilted to favor some retailers over others, at least over the short term. That said, most neighborhood, community, and strip retail centers are less reliant on the sale of consumer goods. These types of retail centers are predominantly occupied by grocery stores, health services, restaurants, and fitness facilities. So while some retailers face significant impact from the tariffs, others will face little, if any, direct impact, which reiterates the importance of each retail center's tenant mix. Now, focusing solely on multi-tenant retail fundamentals. In the first quarter of 2025, the national vacancy rate increased by 20 basis points from the fourth quarter of 2024. But it's worth mentioning that the current multi-tenant vacancy rate, 4.5%, is unchanged from the first quarter last year. Multi-tenant retail absorption was negative for the quarter, but the breakout was pretty even on a metro-by-metro basis. About 60% of the major markets we track had negative absorption and 40% were positive. None of the major metros had a huge setback, and there were no real big winners either. The numbers generally look like the demand is just short of treading water. So it's hard to say whether the data is signaling a shift of momentum or if it's just an isolated data point. That said, recent trade policy uncertainty and the risk that it could translate into a recession may restrain leasing decisions, and that could weigh on space absorption for the remainder of the year. From an investment perspective, retail cap rates remain in the upper 6% range, while commercial lending rates are running in the low to mid 6% range. So depending on the market and the asset, positive leverage on retail real estate remains an option. Now, before I wrap up, I want to mention one more thing. From a demographic standpoint, the outlook for retail remains very positive. The 73 million strong millennial generation is entering their 40s, and they're entering their peak earning growth years. They're also entering their peak spending years. So while we likely face short-term headwinds and absorption did dip into negative territory last quarter, retail construction is very limited, and the combination of tariffs and stricter immigration policies will further restrain the addition of new retail supply. So over the longer term, it looks like retail real estate should have a positive path ahead. And as always, investors need to keep their eyes on the horizon.